it should come down to about 1277. Again, if we're going to look at an example of all time frame trading, I've said, oh, I'm doing that, Steve. Blank chart. Okay, so where have we been? Where have we gone? We've been from the low, we've been to the high. So the 50% is the key pivot. We've rejected that 50%. Okay, so in my eyes, this is a key technical point here. Okay, a 1302 spot 32. Yeah, if the market now rejects that and doesn't get back, lower high, gold gets down to $1,000 down here. Okay, so that's your monthly. Look at your weekly. Lower high, lower high, lower high. If we start going red on good news, gold's getting down to $1,000. Yeah, because it's going to continue this pattern down. See that on the weeklies, see it on the dailies. We're high on the dailies, so again, use your Fibonacci. If we don't get down to the 50% of this day, then we might actually start to go higher and get back to that monthly Fib level. Yeah. If we do and close below it, yeah, then we're going to dig back into all these previous daily highs and could start off at like a mini downtrend. Again, it's all how you interpret the charts and the markets. You know, again, it's there for everyone to see. The previous data is the previous data. You can't get away from that. Okay, so gold, as I said, anything particularly, dovish or good news from the Fed, the comments, we're going to send it down. Likewise, the S&P, we've really, again, simple trend lines, support, support, support. Support becomes resistance. Technical trading. Easy. Below the 50%, rejected, rejected, rejected. Look how these Fib lines are coming in. So we could, if we see bad news out of the Fed today, yeah, then we could see these bottoms hit and the Fed and break below 2,000 again in the S&P. And again, it's all what you think is bad or good news. For me personally, if the Fed say that CPI, PPI are indicating inflation's under control, we've got growth back, we don't have the wage rate back to where it should be, but we're creating a lot of jobs and prosperity, then if interest rates are going to go up, it means the economy is self-fulfilling. So it might go down in the short term, but overall, this is good news. If the market can run with that quantitative easing and then run with a normalized interest rate, then things are actually a lot better than people think. But you have to understand how traders are going to trade that in the short term. So in traditional terms, interest rate hikes are bad because that's how markets react. It's bad news. But now, with all this quantitative easing out of the markets, with all this austerity, with all the things we've done to get the market back on track, interest rates going up could actually be perceived as good news. So very, very difficult way to trade. Never said it was easy. If it was easy, we'd all be doing this by our laptop on the beach. But unfortunately, it's not. This is complicated economics, complicated policy. And as I said, Janet Yellen doesn't know what she's doing, so why should we? But we can have a good idea, the technical versus the fundamentals, and we can get involved. Markets are choppy, price action, small moves. What to look for next? What's the dotted blue line on the US 500? Right. Okay. Well, all the lines on my charts are points of interest. So the red and green lines are hourly Fibonacci's, and all the dotted lines are higher time frame points of interest, so significant highs and lows. So this is how I do a framework. I know where the market's going to go. So, I've got an idea where it's going to go. So again, we're marrying up what the fundamentals are going to be. So all we're really focusing on is rate unchanged, and then we're going to see what's going to happen to the dollar. The dollar continues to go up. That's going to drag down the earnings of all these key firms. Doesn't seem to be bothering Apple though. They've got 178 billion dollars, stashed away. Some of the biggest earnings in history. They're doing fine. Obviously, the global economy as a whole is worrying, and the US really sets the tone. Then we've got the central bank policies. Again, this could steer the Fed's future plans, and that's what we're trying to gauge. What is the Fed going to do in the short to medium term? Is it going to be a rate hike third quarter, fourth quarter, or next year? The longer it is to next year, the more bullish, the more dovish that will be, and the higher the dollar should go, the higher the stock should go, and the lower gold should go. That's what we're looking for. We're all expecting unchanged today, but doesn't mean the markets won't react. Okay? So, got a couple of minutes before this Fed now. So, again, it's just time to get an idea of what you think is going to happen. We're not going to trade an unchanged figure as in that itself. Again, we have to wait for something to come through the wires. So there'll be lots of things said, and I'll try and listen and, keep you informed as best I can. But we'll be focusing on any kind of real movement, okay? So we might be buying some lows in the S&P, or we might be catching some bottoms and buying up gold if it's particularly hawkish for the market. But really, what we've got on our screens now is it. We've got the choice of 8 products that we can see move, pay particular attention to the dollar yen, to the euro dollar. Again, all looking a little bit weak to me at the minute. And gold's one to watch out for. Gold is a maniac on these things. So we could be quickly trading down here or up here, and these quick sparks and movements could be good sells, up here, and good buys down here. Doesn't really matter, does it? Again, it's all trying to find out that bit of instant value. The Bollinger Bands on the hourlies are pretty tight for gold right now. It's expecting a breakout. So anything out the norm, anything that really kind of puts the jitters about inflation and future interest rate hikes or cuts, is going to make this this market move. So focus on gold and these extreme green and red lines. Focus on the S&P. Right, so I'm just going to call out probably just unchanged as the market expects. But as the comments get read out, I will try and interpret them in real time what they actually mean, and then we'll pick out products. I'll point on my screen what it is. I'll tell you if I'm buying, if I'm selling. It's fast paced, but you get one opportunity to trade these things. You get one opportunity to buy the lows, sell the highs. That's trading, I'm afraid. You have to be 100% switched on, ready in the moment, because you never get it back. So that's it. That's trading, guys, I'm afraid. Okay, it's just over a minute now, guys. So let's get ready. We're expecting unchanged. That's fine, but we're listening out for the comments. We're listening for anything else that could be jumped on by the market participants to make our products move. Gold's looking a little bit weak. Big levels, as I said, down here at 1, 2, 7, 7, 11. Okay, get ready, guys. Unchanged. Okay, unchanged as expected. Inflation are going to rise gradually to 2%. Okay, listen to the comments now, guys. Economy is expanding to a good pace. So look for the DAX now reaching these high points. Good news. Okay, so high points. Okay, risk economy fairly balanced. Strong gains in jobs and employment rates. So all pretty good news. But we come off the highs in the S&P and the DAX. So they've taken out the considerable time frame, but they've put in patience. So considerable amount of time is out. Okay. Considerable amount of time, but patience. Patience has been replaced. Doesn't really tell us much, but with a considerable, that means it could be less than 6 to 9 months. Okay. So we're seeing gold take a little tiny bit of a bid, but very kind of choppy here. Okay, so let's watch the S&P just rising. Seems to be generally good news across the board. Again, what the market was expected. So look for these higher points. Okay, maybe a little selling gold if that S&P starts to get a little bit higher and break these upper levels. Okay, so getting up towards these areas, this 161 area in the S&P around here. So generally, again, seeing gold follow the indices, very, very unusual, because if indices are going up, gold generally seems to go down. But, we're just not following that right now. But everything that's through from the Fed right now seems to be a little bit, a little bit dovish, sending the markets up. Okay, so I'm selling gold now, selling gold. Okay, so it's getting some gold. It's expecting the markets just to kind of, again, they're just testing these upper limits here, just trying to push up the to these high points in the DAX. Going to be new highs in the DAX. S&P has already come down. Okay, so just watch. Generally across the board seems to be good. Struggling to hold on to these gains in the indices, but still higher, still pushing higher. Just like to see gold. That should be a signal really to sell gold a little bit further. We just need to break all these bottoms here. We've closed many times below the moving average, and it just all had a good air of positivity about it. That should be a good excuse for gold really to test one spot 284 spot 90. And I don't know if I'm going to get as far as 127 spot 11, but you expect it just going to take out these lows. So all that positivity has been taken out by in the DAX now, but the S&P is still trying to just march up. Seeing a reversal now in the pound. We're seeing weakness in the pound against the dollar. Again, the Swiss just looking a little bit negative. We're seeing a little bit of a bullishness come back into the dollar against the Japanese yen, and the euro looking weak as always. So really everything out of the Fed pretty much as expected. No real surprises. So, I mean, no surprises are good. No news is good news. So I'm surprised that gold isn't really just taking this chance to have a little bit of a relief and sell off. Again, S&P is looking fairly strong, looking to test back to these upper levels. The DAX is just kind of holding around, not doing anything. This could be a short squeeze. We could see gold, quickly, bounce up to 129, spot 20. But let's just give it every opportunity. Again, we're not trading massive size here, but let's give every opportunity to try and test these lows. Still looking strong in the in the kind of in the S&P, and the fact that we haven't kind of retraced down yet. Okay, so just now coming back down in gold. Really, ideally, would like it, again to test 1284 spot 90. This red candle, green candle turns red. That can be good. The fact that the DAX is just holding towards the upper end of the range, and the S&P is still looking, good, should really be in our favour. But the natural correlation between gold and the indices just hasn't been there. But we're trading off this fundamental news. Everything that's been said is what was expected. We've taken out the that key phrase and that we're looking for the key phrase of considerable time. So generally, fairly bullish. So we're flat now in the trade. We could even sell some more gold and average in. Just want that just to kind of bottom out now and go red. I'd really like it to hit that lower level hard. And if we break down, then again, I don't know if we're going to get down. We've got like 12 ticks, 80 ticks, but it's unlikely we'll get that far down. But it'd be nice to see. So again, it's turning red again in the DAX. S&P still kind of hovering around. This could be a good opportunity for gold. Really, just going to take out some of these lows. Okay. Always, quite frustrating, to look and hold on, especially when you're in the hourlies. You should really switch to a smaller time frame to watch it. But because we're keeping an eye on all the markets, we'll just. So another really 4 or 5 ticks, down ticks. We would like to see us, really kind of test it. This level down here. We don't really like this kind of hovering around. But we're on side, we can take some profit out. But let's give it every opportunity to test these lows. We've kind of been high, we've been offside. We're on side now, so let's give it every opportunity to test these lows. Okay, so we bounced off this low area of support in the DAX, and we're still looking, strong the S&P, but. Again, it's still low. We just need that few extra sellers to come into gold and to push it down. Gold's just such a difficult market to trade, though. It's so, counter-directional sometimes. Okay, so we're getting gold now, so we just need a few more pips down to test this low, and I'd love to see it break. But see, straight away, someone's come in and bought all them lows in gold. It just doesn't give you any kind of opportunity to kind of get any kind of meaningful trade on. You have to get these spoofers in gold. Really is frustrating. Taking out huge, chunks of a price at the bottom just before we kind of break these lows. So S&P is really, again, retracing. So looking fairly weak. So might be a time just to get out this trade. Back to flat in the gold trade now. Difficult, guys, isn't it? Difficult. Like I said, all that news really, is fairly dovish. Well, if gold's at the bottom of the range, really where it's been trading, you might get this. Again, always because everyone knows the the fundamental side of it. This ability to buy it up and then to sell it back down higher. But again, we're just bobbing around. Nothing really else has happened. The pound's come down, it's gone back up. SMI's towards the bottom. DAX is bouncing really off these levels of sports. We've seen gold going back up now, so not ideal. Again, we don't really want the S&P here to turn red. But I think, gold could easily, I guess, be pushed back up to that 50% at 192, 130. So we've seen buying in treasuries again, people buying safe havens now. So again, that's pushing the price of gold up. Not particularly great for our trade that we've got now. But indices again, if they turn negative now, that could be a worry. But this could just be a short squeeze in gold, just getting it up to the top of the range continually, and then letting that green candle go red. Again, it's hourly, so if we look on the 15-minute chart, again we can see the Bollinger Bands are very, very close together. So 50% is still a key target, but we're still a very, very strange kind of formation in gold. Really, I don't know what you would call that. It's almost like a reverse triangle, but realistically. The good news, again, trading the good news should send gold down. Should do. And I'd say good news, no news is good news. Taking out that considerable, it could be perceived as, slightly bad news because that meter rate hike could be, closer in the future. But it's been replaced with, cautionary. It's giving the Fed every out that they might possibly want. So again, holding towards the low of the indices. Pound's gone a little bit stronger now. Pound again, it's got these great levels at one spot 5224 and one spot 5239 as resistance. Yeah, Bill, well, it's the tone though, isn't it? It's what's been said. It was said in the last meeting, so they removed it. So it doesn't matter if it's not new information. It's been said. It's been confirmed. So I don't really know what you want. I don't write these things. It's the Fed that write them. I'm just telling you what they said. What do you think? What do you think, Bill? What's your insight into this then? So turning fairly negative in the DAX now, and again, the S&P's looking for these lows, down at 2022.30. Pushing up high in gold, so we might just let it get to that 50%, 1900, and might just average in a bit more, try and get a quick bounce back down to 1288 to try and get something out of this trade here. Looking, kind of like some profit taking towards the top of the range, I guess. There's no particular reason why stock should turn massively negative here. Again, as I said, maybe with the tone that's been said that interest rates, in the markets being sustained without quantitative easing could mean that interest rates are going to be, moved higher. I mean, we've heard different things from voting members and non-voting members alike that the interest rates are going to move before, not until 2016. So you just don't know, do you? Nobody knows. That's the whole point. It's all circumstance. It's all rumours. So it didn't quite make it up to that 50%. So we could see gold again just bounce off this 100% retracement level. Our target, down here would be interesting. Again, looking quite weak in the indices, so naturally that's going to send gold up. But I'm prepared to let it go to 50% on average. If it goes higher than that, I'll get out for a loss. That's fine. It's I'm going to take that on the chin. That's no problem. Gold has this ability just to move in chunks and move very, very quickly. But once you're on the wrong side of it, it's sometimes very difficult to get out. But if you're on the right side of it, it's very difficult to take your profit. So, going back to the moving average on the DAX now, so we've sold off, for a little bit now, and the S&P again is heading back towards this 2022 spot 20 level down here. So again, could be a little bounce area here at this low fib in the S&P. Again, we're out the Bollinger Bands now on the hourlies. So again, this could be a quick sharp move downwards and maybe a bounce. When we're at the top of the indices, like the DAX, always going to get that natural profit taking. But gold's struggling. It's struggling to kind of get to that 50%. So it could be a short term that gold's just been held, and then eventually kind of gets enough short here to push this green candle down. Again, test all this massive area of support down here and just quickly head towards this 128 to 80 level. Again, it also says good news. It's just saying everything, votes and points to, jobs being better, to everything being better in the economy. So maybe this is just a short-term kind of squeeze just to get people out of any remaining longs or take some profit at the top of the range in the indices. Yes, absolutely. I mean, people buying large, amounts of gold is going to send gold up, obviously. But again, it's moving in a natural correlation. The indices are coming down, so gold, does go up. That is the natural correlation. But as I'm saying, on fairly kind of dovish news, I mean, we could see gold, really should be testing these lows, in my opinion. But the markets are difficult. We might have to wait for this candle to close. For the next hour, and then the markets sell off. Gold is notorious for making it difficult for people to stay in longer term positions. We were looking for a bit of a short term break, and again, the market's moved aggressively against us. So you've got one or two options. You either stay in, average and manage the position, or you get out for a loss. I mean, we're not, a huge offside position here, but, nobody likes taking a loss, but you've got to make a judgment call, and that's going to be at this 50% up here at 1,290. So, as I said, I'm happy for it to break the highs, maybe sell some more up here. Again, I just don't see, this is what you generally see with kind of fundamental news, especially late at night. The market will manipulate, push around what everyone expects to happen, and then when everybody's out for, a loss from the retail side, the institutions come in and mop up and make all the money. So I'm just going to sell some more at this level, actually, this 100% level in gold. So I've just doubled up because we've bounced off these low points here, so I'm just expecting the market just to get a bit of parity now. And just, for a quick move down in gold. Again, I'm not expecting it to break and then suddenly turn red. But, if we can just get, down to these levels down here, then maybe we can get out of this trade, with a little bit of, a little bit of a profit, a little bit of a result. The fact that it hasn't got to that 50% or made a new high from here means that, really, as the markets tend to now bounce off the bottoms and are recovering a bit, then gold should see a bit of not profit taking, just at least the opposite side. So getting coming back now, coming back. So again, don't need much for it to come back because we've averaged in now to get in profit. Again, it's not awesome trading this, but again, it's what you have to do. Unfortunately, you've got to play the market at its own game. So we've just opened up that next 50-minute candle now. So hopefully this is going to go red. If it makes a real dash to get down to the moving average in here, then we could be all right. So in profit now. So in profit, again, nothing major, but we can get out of the trade for some profit, or we can get out for a scratch. Like to see a little bit of momentum come in. If we just have another couple of ticks down without it completely reversing, as it generally always does and goes green. We just see them sellers come in. We could get, a nice little breakdown back to our original entry point. And then that's when most people will get out. And then we'll hover. And then we'll go down to here. Because that's what generally happens. Institutions greedy and take all the money. But I'll be happy to take my trade around here because I've averaged in and make some profit. Okay? So this is the kind of, waiting game. And this is what you've got to do. Again, you generally don't get the market moving as quickly as you'd like when you're waiting for a trade. But we've bounced off now. And when we're looking at these hourly views, we've bounced off these lows around the fib level here in the DAX and the S&P. So we just need probably a couple more ticks down in gold to try and get towards, the original kind of point we're trying to get short in the first place, and for then the market to maybe attempt to break and get down to this lower level here at 1282 spot 80. So just coming in now, a little bit of strength. So we just want to see if it hits that level and breaks through, then that would be very, very satisfying. So again, we'll turn that losing trade into a winning trade now. So we can scale out of half. Okay, scaled out of half just to lock in some profit. So what we're really kind of hoping the market will do now is just get down to this original level where we tried to get short in the first place. So it kind of means the institutions have stolen a march on us. It means, the bigger boys and the bigger fish out there have stolen maybe 28 ticks on us. Okay, so what they've done is they pushed the market up and expecting everybody to get down to here. Whether we were short originally off that fairly, not generally benign, but fairly, I would say, in my opinion, dovish news, which should send gold down. So again, trading off the 15-minute charts, quite difficult. You're going to see chops. You're going to see another 13-minute of people trying to figure out, what's right, what's wrong. As I said, I've locked in half my my profit now, so I can get out at any point for a profit or a scratch on the other half. But that's all because we averaged in back at this key level up here. So we might go back up here and test. If we get out up here, then we get out for a scratch for the whole trade. It's no big deal. But, again, by averaging in, we've locked in our trade and give ourselves a little bit more, bought ourselves a little bit more time. But, we don't get back to this level up here. The market really should be testing these lower levels and breaking through. As I say, bouncing off the moving average, bouncing off the lower levels of support and the low end of the Bollinger Bands. But, again, if trading was easy, we'd all be doing it. This is real difficult trading in these scenarios. No one has said that, anything is cast iron, it is this, or the Fed will do this. They never do. So it's all the experience, it's all the understanding you have to have of what this market, is looking for. And gold has pushed up now, so it's got every opportunity to break these lows and sell off another 50 ticks if it wants. And all the institutions are nicely locked in and safe up here. Okay? Always the institutional versus retail thinking, guys. Always. It's institutions have bigger pockets, can hold trades longer, just a bit more experience. So again, saw that up move, down move in the S&P, down to back to where we were trading before. Looking a little bit weakish in the DAX, but I don't really think that's going to affect gold. The pound again is back to that 50% level against the dollar. Nothing really, has happened outside of that. I mean, you see what's happening. Again, we're in a real fight here. This candle's going green, it's going red. But as long as we hold below here, then we've got more chance, I would say personally, of it testing and then breaking lower quickly than it, goes higher. I mean, again, we look at gold on 15-minute, we've got rejections when we see them on key levels. We do see it come, but it doesn't come when you want it. It doesn't just happen like this when you're trading, unfortunately. So we're looking for the next 15, 20 minutes, half an hour or so is this to be emerging. So this to go here and then to go here, all right? But, you never know. You might just get these lows taken out in one candle. But, it's got room to move on the downside. As I said, we've traded it well. We've locked in some profit and we know we can get out of this a scratch. But what we're looking for is now it's a test and break the 128,620 level that we're looking to get short anyway. So more and more profit now, more profit coming in. Lovely profit. We like the profit. So if it can break now, it's going to get everybody else. Look how quick it bounces. But, we're still red. And look at it marching back. That's what you want to see. So we want to see it test this level. Yeah, and it breaks through. There we go. So support level here. Next level here. We've made our money. There we go. That's live trading. That's what it's all about. So we can take our profit at any point we want now, guys. But if you want to be brave and let it get down to these lows here, as it should do, then that's up to you. But there we go. I've made 80 quid or so live. Banked 80 quid. We can make another £100 or so here. And there we go. Gold's doing exactly what we thought. Institutional, bashing through the level we wanted to get short originally, taking everybody offside, now coming lower. So your support point is 1283.78 and 1282.80. I know this because I've got my framework in play. So institution and what they've done, squeezed everybody out for 30 ticks, and there we go. So there we go. Oh, there we go. Blimey. What did I say, guys? What did I tell you? There we go. So institution squeezes out for 28 ticks and, has made itself 70 ticks, 80 ticks. Maybe it can make itself 136 ticks. So we've just made bags of money there for absolutely nothing. Go take it out now. Take it out. Take it out. So there we go. There we go. Well, I wasn't expecting that, but as I said, I said you could, get this taken out all in one candle. Blimey, it did, 35 ticks. So potentially we could get 98 ticks down to here. Might be a little buy down here, to be honest. A lot of levels down here. But I'm out for profit now. That was wild. But this is it. All these people, these so-called experts say you can't make money over Fed. Absolute nonsense, okay? The people don't know what it's talking about. I'm telling you in real time that, what the market's thinking. This is bullish news. It's dovish news that, we're talking about the right kind of things. We're saying that we're not going to raise interest rates just yet, but it's on the agenda. We have to be patient. We have to be right. We stop the quantitative easing. That's good news. On good news, gold goes down. Simple as that. Okay? So it doesn't matter the DAX, it's coming down. The S&P really is just going up, go down. Gold is the one to watch. I've always said this. Every time I trade the Fed, you have to focus on gold. You have to focus on, where the real big money players are. And at 7:20 at night, it's in gold. So there we go, guys. That's £300-400 of profit, for a trade that we took a little bit of pain up here and we kept our wits about you. And, regardless of what the people said in the room, I took that as particularly, dovish news, and that gold should get hammered. I didn't trade anything else. I traded gold, and gold got hammered. There we go. So That's it, guys. That's live trading. That's what it's all about. It doesn't have to be the biggest event in the world. It just has to be something said. And the way you interpret it, my 80-20 rule. Like I said, if you want to know how this is done, guys, I view charts. This is the system I use, and this works on any product on any time frame. This is what I use. This is what I've developed to help people trade, having this framework. So the 423 is the natural point of support after this hourly retracement. Works around the 50%, support, support, support. And again, by having this framework in play, you can trade any market instantly. You can see when the news is coming out. All the news is here. 22 minutes since the FOMC. We've got 12 hours, 6 minutes until the Germany CPI data. We know what to expect. If gold comes back to here, 127.730, gonna have a little cheeky buy there because there's no other levels here, nothing else. So we'll buy a little bit down here. Got profit to play with, and this is going to be one almighty candle if it gets down to that 15 minute. 80-20. I mean, this is it. 80-20 is what it is. The markets are moving now in a fundamental manner based upon what's said. And it's not what's said, it's what's not said. So by removing, that particular phrase, we've led a little bit of interest into the markets. So again, look for this low level to be hit. This could be hit in a couple of seconds, guys. I mean, look how gold jumps. So, a big solid candle. So we were looking for it to break here, 14 ticks. And as it did that, really in one fell swoop, it went, it went 80 ticks. 80 ticks down. So there we go, guys. Well, that was an interesting session for once. I think it really does hammer home about all these so-called experts that say nothing happens on an FOMC meeting or Bank of England meeting or the ECB. We're out of the growth cycle. Growth cycle's gone. Quantitative easing's gone, so we're out of the growth cycle. We're focusing on inflation. We're focusing on interest rates, anything to do with interest rates. That is the economic cycle, growth or inflation. So when we bring these into the forefront, it's gold and it's other things like the dollar base that are going to get hammered and going to really kind of make that difference. So I said gold's always one to watch. We traded gold, we made money. I'm not here to say I'm the best trader in the world. I'm certainly not. But again, these live demonstrations with real money, these live demonstrations, of me telling you real time difficult things. And they are difficult. And you've got to stand to your guns and you've got to be confident in your opinion and understand. I said the Bollinger Bands were tight, due for a breakout. I said we're going to get squeezed by the institutions. Then we saw the institutions take all their money. Thanks very much. That is the way trading works. Anything else you want, guys? Anything else you want to go through quickly or for the next 10 minutes? I'm not going to stay for particularly long tonight because I've made my money for tonight and, I don't want to get sucked into trading for the sake of it. Pound dollar. Okay, pound dollar. Right, we're seeing a very interesting kind of, I guess you call this traditional head and shoulders type pattern that's been broken. So you've got your neckline. So maybe, this is, the rejection of the 50%, so we could be moving lower. I'd say on the pound, I mean, it's a difficult one. I'm just going to go to a blank chart. The Fibonacci works very, very, again, well on your high time frame. We'd have opportunity to get to the 50% Fibonacci up here on the monthlies, and I thought we were really going to get to that, hold above and go stronger with interest rates in the UK going to go up before any of the G8 nations. We didn't, and then we see 1, 2, 3, 4, 5, 6, 7 months of selling. We're going to see a hard bounce at some point, that is for sure, but where do we see it? I don't know. We're going to take out these lows perhaps, then we trade down here, so maybe we get as low as 1,42982. But what we are going to see, I would say, is we get down to these lower levels, we're going to see one candle get back to here, one monthly candle. We're just going to see one of the hardest bounces you're ever going to see because the pound is going to get a lot of foreign investment, it's going to get a lot of interest because the UK are going to move first on interest rates. I don't care what anyone says. Yeah, I told you gold's going to get to $1,000 in 2013. Yeah, we're closer to my level than the highs. I told you the FTSE is going to get 7,000 because every other market, indices-wise, has hit technical levels and psychological levels. So we're going to see a stalling point after 7 months of selling, then it's going to come back. We're going to get back to 164, maybe 172 at some point in the pound. And it's going to be a hard bounce, it's going to be quick, and it's going to be brutal. So be ready. Again, get your fibs in play. Once we close above 153, I would say it's buy all the way back up to 163 and maybe above. Okay. On the hourlies, again, I think we probably have more downside risk than we do upside risk. Double top on the upper fib, touch to 50% and close down. So close below this level here. Yep, a one spot 5714. Then you're expecting to get down to one spot 51410, and then maybe we trace a lot of this spiked up move and get down to one spot 50907. So you could put a longer trade on if you want from where we're trading. Put your stop above here, 25 ticks, or maybe here 50 ticks to make 30 ticks, to make 80 ticks, to make 138 ticks, to make 163 ticks. We're going to go low before we get higher, but there's going to be an almighty bounce in the pound. And once you've spotted it, it's going to be too late, guys. So get your levels in play. Yeah, there's going to be some hard bounce in the pound, that's for sure. Any view on the euro dollar? Any view on the euro dollar? Of course, it's going down. The euro's finished. All this nonsense with Greece, it's just going to get worse. Greece are going to leave. It's going to be North and South Euro. I've said this for ages. Again, 50%. Tested, lower. Yeah, tested, attempt, rejected. So we're looking for 1 spot 1,334. Then below that, 1 spot 12787. That's really what we're looking for here. Okay. So I would say, hourly's still look a little bit kind of positive, to be honest. We've got a positive slope in the market is buying up to some extent, but my fundamentals just telling me, screaming to me that we're negative. I mean, look at this. 1, 2, 3, 4, 5, 6 months of selling and these low points, but I don't think we've finished until 1 spot 07499. So again, interesting to see. It's got a difficult on the euro dollar. Very, very, very oversold, but parity 1 spot 0 is on the cards, isn't it? Okay, so I'd remain short the euro dollar, but again, not for any long periods of time, guys. Just get in, get out. Look at this big retracement in gold now already. Yeah. So again, just institutional people getting out, buying some more of the low. Free money for the big guys. DAX, getting pretty heavy here. So get into the 50% at 10638, spot 27. S&P on these lower fib levels here. So again, maybe the markets, or maybe I was wrong. Maybe that was the institutional squeeze. But whatever. Again, I can only tell you how I interpret the markets and how I use my 80-20 rule. For me, I thought that was fairly good news, so I was happy to sell gold. And it did what it obliged, and we made some money. Markets could continue to sell from the highs, but, it doesn't really matter, does it? What else have we got? Aussie CAD. You guys love your Aussie, don't you? Aussie CAD. These are things I never trade, to be honest. Obviously, with the interest rates being changed unexpectedly, we saw quite a big move in the Aussie. So Aussie CAD, seeing this, big spike, based upon the previous events we've had, these gaps are still yet to be filled on the hourly charts. So we're going to continue this up vein. I think we break 0.99588, then close this gap and certainly get back to this level here of 0.99861. So looks pretty bullish to me. I mean, again, if you go on a blank chart, I would say your Fibonacci is a great example of this. I would say your high to your low, look for your 50%. I mean, tell me that's not working. 80% of the time, a strong directional move will retrace to 50%, pops through here, but the next candle opens up and we go higher. So this has to make a new high. Yeah, if my theories of Fibonacci are correct, having support, and then support, we have to go higher. So this gap's going to be closed probably here, I would say. So I think we've got, a potential of another 26 ticks or so. I'd say we definitely have to break this high here if the Fibonacci is going to be in place. So a little bit of bullishness left in the Aussie against the CAD. New Zealand dollar, US dollar. Okay, that'll be the final one for tonight, guys. Okay, so looking lower again. Gap been formed, been closed several times. Monthly, what an ugly chart. Let's say up move, double top here, 50%. Where is it? Here. So I think we go lower from this point. Again, we're on the monthlies. Look on the weeklies. 50%, yeah, active very, very nicely. So below the 61.8. So yeah, I might just pick some lows down here. I'd say we've got a definite room for the New Zealand dollar to get some serious weakness against the dollar. Hourly wise, where would that be? Difficult one to say. I would say. Hmm. Difficult. I'd say maybe 0.73391 would be, again, we hit these lows here and then break through. So potentially, again, another 25 ticks and then 84 ticks below that. It's a downward trend, that's for sure. But difficult one, guys. I don't know enough about the New Zealand and the Aussie, to be honest, from currency perspectives. I just don't trade them that often. $4 trillion is out there in, the markets and in the dollar and the pound especially. So I stick to markets I understand. So again, I would say potentially this low here is going to be tested and we go lower. But to be honest, I'd just be kind of going blind technical here. I wouldn't put any real conviction behind that, I'm afraid. Do you look at the Aussie gold correlation? No, never. I never look at that. Pound, New Zealand dollar. Yeah, no, I think you're right, guys. I think I could go through everything right now, but I'll save that for another session in the future. What we'll do now is just review really what's happened. Let me just get the DAX back up. Okay, so coming back to these lower levels, I'm going to buy a little bit of DAX here, just because I can. So we hit that 50%. I'm going to see buy a little bit here on these lows. S&P potentially to 0.1350. DAX looks like it's a little bit more overextended than the S&P. So again, Swiss hitting their big low levels, closing that gap at 830, 0.150. So again, look for the correlation to the markets. Yeah, this has got down to here to push before it bounces. So again, this could push it down, push the S&P to bounce. Again, it's picking out these correlations. I'd rather go off the DAX, SMI, FTSE, and S&P rather than trade it off the gold. Currency has not done a great deal, looking a little bit weaker in the dollar yen, and we're just kind of bouncing around that support level of the euro dollar. So 9:34. 34 minutes after the Fed. Is this the time to buy a little bit of DAX low? Interesting. Again, if gold starts to go up, which it is now, that could push the indices a little bit lower. I mean, we've seen a big swing in gold there, and that's just why it's so difficult to trade, even on the 15-minute candles. It's you can't hold a position for long in these markets. You've got to see your profit on the table like we did. And I took it. No real reason down here, just that the profit was there. You've got to take away you can, because if you hesitate and wait, then that's it. You're back from being in a profitable position to an offside position and could go on to make new highs now. Too wild, guys. Too wild, too difficult. Market's too difficult for leaving money on the table. Get into the trades, get out of the trades. Again, already retreating a little bit in the S&P. So we did just see like 2 little pips down in the DAX to this level, 106.3890. Just a little cheeky buy, just to maybe get a few more ticks back up. Again, I'm not looking for a massive trade here, but again, just nicking money constantly out of the market with fairly limited risk. That's how you become a good trader. I'm up about £3,500 in the last 5 or 6 weeks of trading. Never made more than about £300 in a trade, and never lost more than £100. Just ticking away, buying the levels, selling levels, being vigilant, looking at my charts like this, watching that 50%, how it's so important in the markets, and then buying low, selling high. Right, there's just some comments coming out, guys. Why not? Okay, it's just some comments there, and again, all generally fairly dovish, guys. More comments. Again, they're so hard to quantify these comments. Who should you trust? Who should you listen to? But, these comments come through all the time. You have to look at your newswires, listen to your squawk. But again, a couple more pips down in this DAX, and this looks a good buy to me with that S&P just really holding on that 261.8 retracement point at 2020. Again, guys, I don't really want to get sucked into a trade. It's late in the day. We've made some good money. Again, it could have turned into a nightmare with that trade, but it didn't. We got out. People might say it's more luck than judgment, but whatever. I don't really care. I'm here making money live in front of people. Told you why I did it, and it happened. That's the markets. And the institutional view versus the retail trader view, very important. My 80-20 rules of fundamental versus technicals are very, very important. And my levels are spot on and solid. Always have been. All right, guys, listen, I think that's enough for me today. I've spoke quite enough. I hope you enjoyed it, and I hope you made some money. And if you didn't, then there's always a next time. If you want to get hold of me, get me on my email sruffley@tradermaker.com, or get me on Twitter @SteveRuffley. I've got an iView charts page on FX Street, so you can look at that. And if you want to view how I trade and use my charts, read my blog. It's it's full of Ruffleyisms, and I just say how it is. All right, guys. Well, listen, hope you enjoyed it. Thanks to FX Street and the guys, and I'll be around, and I'll be doing my webinars as always. All right, guys. Have a great evening. Take it easy.